Hello and welcome back to the channel. In today's video I'm going to be diving into the price action of DXY, 10-year government bonds and Euro USD, highlighting how I used key economic drivers to more accurately time my swing position. I'll also explain how I identified the current market profile and leverage that understanding to actually identify a high probability swing trade in the first place instead of an intraday setup. Stay tuned as I walk you through my analysis and reason of price action to actually execute myself into a trade. So first things first, let's actually look what price action did in the previous week. We can see on our weekly time frame here that price actually made a short-term reversal into this weekly fair value gap. Post this short-term reversal, we can see price actually trade to the upside in an expansion profile. Now, this was important for me even going into this week's trading week because of where price actually managed to close. So we can see price candles closing to the upside of this high here, giving me confirmation that we're still in a continuation profile to the upside for the dollar index. Now, from this point onwards, this is around Christmas time, the 20th all the way just to the first, and this for me was just no trading, like a lot of you actually know and understand already, so I'm not going to get too much into that. But all we actually did here was a range of consolidation, actually just generating buy side liquidity, orders being placed, and just actually not really having anywhere to actually draw. But one thing that was crucial, what was can be highlighted, was what price actually did trade into. We can see that price actually traded into this daily fair value gap, giving us some sort of confirmation from this Monday here that price was going to trade higher. And yes, it's exactly what price did. Price traded to the upside and yet again closed above this high. This was giving me extra, confirmation that market participants were most likely going to then push price higher. And we can see after this point a daily fair value gap was created as marked out in green. So let's actually drop down on our 4-hour chart and see what price did going into this week. So you can see the previous week's Thursday, this is the previous week's high. See, this was left behind, and now I was actually anticipating Monday to actually trade into this daily fair value gap and actually, react off it and trade above it. But price actually disrespected it and ran too lower. Now, this often tends to happen, especially weeks of with lots of news drivers, just to generate liquidity. We can see as of now, there's equal lows created, but let's ignore that for now and just go into the analysis and why I actually chose to take a swing position. So price traded lower here, and from this point onwards we're going to start to see our news drivers pop up. So on Monday here we can see we've got Euro driver. Tuesday we've got some of our DXY drivers and Euro drivers. Wednesday, yes, we can see we've got some of our bigger news drivers, all showing confirmation that price wants to push up higher, that participants are most likely going to trade price towards this high. Now the key for this actually giving me confirmation was how we actually managed to trade and close back above this daily fair value gap. Now we can see as well our 10-year government bonds. We can see a clear draw of price aligned with our previous weekly high on DXY. Now it's clear for me because you can see price trading into the daily fair value gap, doing the same, pushing price to the upside, clearing some sell side liquidity. It's a strong continuation profile of price, and that's where we're looking to actually get in line with a trade. If price was beginning to reverse here, this is where we wouldn't want to look to get into this reversal here. Yes, you might be able to get a short-term intraday position, but it's only high probability if you've gathered the data on it and actually stress tested it, applied it to real trading, and you actually stick into the reversals. But for me, I like to trade in line with higher time frame, trend, and I'll actually focus on the profile that we're actually in. So let's drop down to the 4 hour and show you why I actually had an anticipation that price was going to go lower for Euro USD and higher for DXY. So we can see instead of actually creating, you know, R equal lows like what DXY did, we see that the 10-year government bond actually was trading, quite high, reacting off these 4 hour fair value gaps and supply zones and as a result of market participants trading. Now price pushed up again, and we can see again price is closing above our daily highs here, and as soon as it does, this is where I'd be looking to get into a swing position. What's left behind here is a 4 hour fair value gap, perfect to actually look for a swing trade. So let's go on to Euro USD and actually show you the analysis on this. Same thing, weekly time frame, we can see a clear trend that, participants are pushing price lower. And as a result of this, we can see, traces being left behind, such as, weekly fair value gaps, candle close to the low, etc. Just simple technical analysis. But it removes the noise focusing on this instead of, focusing on, certain breaker blocks at certain times in the 1 minute time frame, etc. Let's take a look, a little bit closer towards the trade actually taken. So price traded up to this value gap, and this high was crucial for me. And this is where I actually expected, price not to break above. Reason being, we can see there's no candle closed above on the 4 hour time frame, and we can see, the reaction of the wick. Price run high, run lower. Price react. You know, simple as 50% of our range here, OTE, pushing price lower. And once price actually pushed lower and closed below, obviously in line with DXY and 10-year bonds, this is where I'd be anticipating some sort of continuation to the downside after this short-term reversal has taken place. And now the reason why it's after the short-term reversal is solely down to the economic calendar. Now I'm not going to get too much into the video as in this video, as I'm sure a lot of you actually are aware, planning your trades around it. But notice when I look to get into a trade, it was past, midweek, and the reason being, it's simple. It can be simply shown here. The daily candles become more and more predictable. It's like today, look how predictable this daily candle was, in line with our news drivers. So execution was actually based post price coming down from this 4 hour fair value gap just here, just there, as we start to see, 4 hour show signs that it does want to go lower. And stop loss was just above this high here, as this is where I anticipated, high to not be broken past. Now it's as simple as that. And the reason I actually avoided intraday setups this week is because look at the range of price. This isn't high probability price action. Now getting myself in a swing trade this week, it removed all of this noise, and this can also be predicted. We'll take a look before our big economic driver today. We can actually see Thursday there's no news, so what's most likely going to happen? Consolidation range. And let's just focus on where I actually took profit, was previous weekly low, and it's as simple as just being in line as well with DXY. So, previous weekly high here, and let's take a look at government bonds here. This was there, previous yearly high, a very, key high and clear draw of liquidity of where market participants are most likely going to push price, and as a result, yes, you're going to get, you're going to be able to take advantage of repeatable technical analysis such as fair value gaps and what's most likely going to happen. But overall, it's just important